Welcome to the Conde Mathias Autumn Statement Summary. After the Chancellor's recent autumn statement, we assess today the impact of Jeremy Hunt's announcements and look at the changes most likely to affect our clients. The Chancellor started by announcing that the United Kingdom was officially in recession, according to the figures from the Office for Budget Responsibility. This was perhaps not surprising at all, given the challenges that the nation faces, from rising inflation to an international crisis that are driving up many costs for businesses and individuals. It was anticipated that this would be an annual statement full of tax rises and spending cuts. Stepping to the dispatch box, Jeremy Hunt delivered both in equal measure, as he outlined why they were necessary to put the nation's finances on a path to stability, as he called it. In today's presentation, we'll look at the various measures and what they may mean for you and your business. Income tax and national insurance. Amongst the first subjects he tackled was that of personal taxes. Higher earners will see the threshold when they start to pay the additional 45p rate of tax fall from the current 150,000 to 125,140. This means someone earning around £150,000 will now pay more in income tax each year. Equally, it will mean that many more people will now be caught by this top rate of tax too. Prior to the big event, Jeremy Hunt said that his speech would also include tax rises for all, not just the few. He didn't disappoint, and his decision to freeze personal tax allowances will definitely affect millions of taxpayers. The thresholds for national insurance and income tax will now remain at their current levels for at least a further 2 years, extending the tax freeze period until 2028, with the main rates of tax remaining the same. With recent wage inflation, these measures will catch out many taxpayers who may now find themselves creeping into a higher tax band. This is the phenomenon otherwise known as the fiscal drag effect. Dividends and capital gains tax. Cuts will also be made to the zero dividend tax allowance, which will fall from its current level of £2,000 to £1,000 in 23-24, and then to £500 in 24-25. If your current remuneration plan is reliant on this allowance and you are concerned about what the changes to dividends may mean for your income, it's best to seek advice before these changes come into place. We'll be reviewing all our clients' dividend strategies to see how these changes affect their circumstances going forward. The cuts continued, with the annual exempt amount for capital gains tax falling from £12,300 to £6,000 in 23-24, and then to £3,000 in 24-25. So, once again, more taxes, meaning a larger amount of investment income and gains will become subject to tax. Moving on to inheritance tax and on-the-road taxes. The inheritance tax nil rate band again remains frozen at 325,000, which astonishingly is where it's been since 2009. Yet a further example of the fiscal drag effect, meaning assets rising in value, including some homes, may be caught by inheritance tax. On the subject of road tax, the Chancellor added that electric vehicles will be liable for this from the 1st of April 2025, and the car and van fuel benefit charges and the van benefit charge itself will also increase in line with CPI. Electric vehicles have a very favourable tax treatment, which was always going to come to an end at some point, which we are seeing now. Moving on to business taxes. Addressing research and development, the Chancellor revealed that the enhanced deduction for research and development tax relief for SMEs will be cut from 130% to 86% from April 2023. The tax credit for loss-making SMEs will fall from 14.5% to 10%. This means if you're a loss-making company, from April, you'll now only receive £18.60 for every £100 spent, compared to £33.35 per £100 now. That's almost halved the relief. Meanwhile, profit-making SMEs will see the amount they can claim reduced in real terms by 13%. Whilst not mentioned in Mr. Hunt's official address, the OBR revealed a potential 23% rise in duty on fossil fuels from March next year, a move that would push the current average price of petrol up by around 12 pence. This is an issue which is likely to have a significant impact on all aspects of business in the UK. However, Jeremy Hunt has since sought to distance himself from this figure, and he said that he will speak again in the spring budget about his plans for fuel duty. There was no mention of any extension of the Energy Bill Relief Scheme for non-domestic energy users after the end of March next year. Moving on to company taxes. Also not mentioned directly in the statement was the forthcoming rise in corporation tax. From April, small companies with profits of up to 50,000 will continue to pay corporation tax at 19%. However, companies with profits of £250,000 and over will pay corporation tax at the increased rate of 25%. Those companies with profits over £50,000 but under £250,000 will pay tax at a marginal rate of 26.5%. Businesses need to plan for this rise in tax carefully and maximise the use of existing capital allowances in this year where possible. It may also be beneficial to move profits and losses between the current and upcoming tax year to take advantage of the lower tax rates. Moving on now to wages and rates. So next up were the announcements pertaining to these business costs. The biggest news was that national minimum living wage and the national minimum wage would increase to £10.42 an hour from April 2023 for those aged 23 and over. The hourly rates for those aged 21 and 22, 18 to 20, and 16 and 17 will rise to £10.18, £7.49, and £5.28 an hour, respectively. The apprenticeship rate will also rise to £5.28 an hour. A move to revalue business rates will also go ahead as planned in April. However, the Chancellor has recognised the impact this would have on many businesses, particularly those hit hardest in recent years, and outlined government funding valued at £13.6 billion to support them. This will include a freeze on business rate multipliers in 23-24 and additional support provided to those in the retail, hospitality and leisure sectors, where the relief they will receive will increase to 75%. Business rate bill increases for the smallest businesses losing eligibility or seeing reductions through the Small Business Rates Relief or Rural Rate Relief schemes will be capped at £600 a year. So finally, as with most budgets, it's a bit of a mixed bag with ups and downs for everyone. But as usual, it's important to know how the specific parts of the budget affect your business. For insightful and professional advice related to your specific needs or concerns, please do get in touch with our experienced team today. Thank you for listening.